It had been a long day. Department after department filed in, one after the other, to speak to us. It was our first day as new hires. My table was filled with other wet behind the ear, fresh out of college, management training, new hires. While it's exciting to start a new position, onboarding can be stressful for new hires. I was quickly approaching the information overload stage, with my brain refusing to take in and process more new information. It was at this point that the benefits representative came in to address us and have us complete additional paperwork. Now, let me say, as a learning and development consultant and someone who has conducted onboarding and new hire training, it's never a good idea to discuss money and benefits after lunch. But this was my first job out of college and first experience with the onboarding process. As a representative finished reviewing vacation, sick time, also known as PTO, paid time off, and medical, I took a deep breath. Okay, it's almost over, I thought. But then she launched into mandatory United Way contributions and investment options. Mandatory contributions? They can't force me to give a charitable contribution, I thought. But as that thought came to mind, I saw all of my new colleagues dutifully filling out their contribution cards. Next, the representative talked about pre-tax contributions to a retirement portfolio. She explained the vesting schedule and then, thankfully, called for a 10-minute break. It was at that moment that I made a mad dash to the phone in the kitchenette of the training room to make an SOS call to my dad. Dad, they're saying that I can invest up to 8% of my income pre-tax. What's that? My father then explained to me what that meant, but he also emphasized the fact that I needed most of my take-home or net pay now to pay my rent in a new city, car note, insurance, groceries, to live, and that I should consider putting a small portion of the 8% into investment, but not all of it. That was my first real foray into financial management. If you're new here, my name is Jennifer Mitchell-Early. I help individuals and teams achieve organizational and personal success by providing customized training, resources, tips, and tools to help you pursue purpose and accomplish your goals. If you're looking to grow and evolve personally and professionally, be sure to subscribe and don't forget to hit the notification bell so that you'll be notified every time I upload new content. Today, we're talking about financial literacy and personal financial management. In all honesty, when I graduated from college, I wasn't very financially literate. While I've worked since I was 15 years old with a work permit, the only time that I had to manage my money was in college. And to be fair, I was still only responsible for putting gas in my car and feeding myself, and only during my junior and senior years of undergrad. That was definitely not enough information to have under my belt as I moved away from home and started my first real job with real responsibilities. I can remember getting my first paycheck and sitting on my bed in my 2-bedroom apartment and crying because I didn't have enough money to buy groceries after paying my bills. Now, you might be thinking, wow, this is a departure from what she usually talks about on this channel. And to that, I'd say, well, not really. As an educator, leader, former professor, elected official, and author, I've spent most of my life educating folks on things that impact their lives, whether that be personally as property, home, landowners, residents, constituents, personal development, life and career goals, or as it relates to spiritual or emotional formation and empowerment. And professionally, career-wise, in the leadership arena, as a professor or for business owners, stakeholders, and clients. I believe strongly in the notion of education, continuing learning, and being an informed and engaged participant in life. As such, I emphatically advocate that knowledge is necessary. We've all heard the saying that knowledge is power. Knowledge is power is a proverb that means the more one knows, the more one will be able to control events. Knowledge is power, but the ability to apply it is necessary. Applied knowledge gives you the ability to change circumstances and navigate convoluted and obstructed paths. It not only demonstrates your intelligence, but also gives you credibility, strength, position, strategy, influence, and authority. If you've been watching my channel for any length of time, then you know that I talk to you about topics that I believe you need to know. Today's topic is a part of a new series and playlist on this channel entitled Knowledge is Necessary. If you like what you're hearing so far, make sure to hit the like button. And if there's something that you want to know more about, drop the topic or topics in the comment section below. Okay, let's get back to it. Financial literacy is vital to our success individually, as well as the financial health of our families. I was raised in a middle-class home with college-educated parents and a father who was a successful entrepreneur during my early childhood. Yet, I was like a fish out of water when it came to managing my finances as a young adult. By the time that I was in my middle to late 30s, I had debilitating credit card debt, was living paycheck to paycheck, and contemplating filing Chapter 7 bankruptcy. This is after having a career as a banking center manager. Despite the fact that my brother was and still is my financial advisor, even with his careful, strategic, and profitable management of my financial portfolio, my personal finances were a mess. I was in a bad marriage, had significant debt, and little to no expendable income after the birth of my daughter, necessitating that I liquidate much of my IRA, my individual retirement account, and other investments just to make ends meet. Of course, at my brother's expressed objections and consternation. In the latter half of my life, I have made significant strides in my investment portfolio, thanks in large part to my brother's investment savvy and management of my portfolio, as well as my own understanding of how to manage my personal finances in such a way where I learned to live beneath my means so that I could begin to save and invest money. I learned the importance of allowing my money to work for me by way of compounding interest and investing in things that appreciate rather than depreciate. According to Investopedia.com, financial literacy is the ability to understand and effectively use various financial skills, including personal financial management, budgeting, and investing. Although many skills might fall under the umbrella of financial literacy, popular examples include household budgeting, learning how to manage and pay off debts, and evaluating the trade-offs between different credit and investment products. These skills often require at least a working knowledge of key financial concepts, such as compound interest and the time value of money. The lack of financial literacy, not having knowledge about financial literacy topics such as economics, interest rates, savings, loans, investments, and long-term financial planning is a significant hindrance to an individual's economic opportunity, mobility, and long-term financial success. It can also have a devastating impact on consumer credit scores, which influences not only one's ability to obtain loans and credit cards, but also impacts our ability to purchase or rent a home, as well as even the type of employment we may be able to get. Despite the fact that we make decisions about money every day, less than half of America's states require students to take a course on personal finance. And yet, as soon as students complete post-secondary education or college, they go out into the world with very little knowledge about the responsible use of credit cards, student loans, mortgages, and other types of consumer debt, not to mention how to develop a long-term financial plan to develop and achieve personal financial objectives. Jason Fernando, author of the Investopedia.com article, Financial Literacy, What It Is and Why It's So Important, asserts that financial literacy is crucial for managing your money by planning and saving enough to provide adequate income in retirement while avoiding high levels of debt that might result in bankruptcy, defaults, and foreclosure. He notes that in his Economic Well-Being of U.S. Households in 2020 report, the U.S. Federal Reserve System Board of Governors found that many Americans are unprepared for retirement. More than 1/4 indicated that they have no retirement savings, and fewer than 4 in 10 of those yet retired felt that their retirement savings are on track. Among those who have self-directed retirement savings, more than 60% admitted to feeling low levels of confidence in making retirement decisions. Low financial literacy has left millennials, the largest share of the American workforce, unprepared for severe financial crisis, according to the research done by the TIAA Institute. Even among those who report having a high knowledge of personal finance, only 19% answer questions about fundamental financial concepts correctly. 43% report using expensive alternative finance services such as payday loans and pawn shops. More than half lack an emergency fund to cover 3 months' expenses, and 37% are financially fragile, defined as unable or unlikely to be able to come up with $2,000 within a month in the event of an emergency. They also carry large amounts of student loan and mortgage debt. In fact, 44% of them say they have too much debt. Individual financial problems have a wider effect on the entire population. For example, the financial crisis of 2008, which was a result of a lack of understanding of mortgage products, creating vulnerability to predatory lending, adversely impacted the entire economy. Knowledge is necessary. Financial literacy is necessary. One of the most comprehensive financial education online programs, which is free, is the St. Louis Fed Economic Education Program. The Fed's Econ Lowdown has over 400 free courses in English and Spanish for students from kindergarten all the way to college. The modules are created by economics and education professionals at the Federal Reserve Bank of St. Louis, as well as by professionals at the Atlanta, Chicago, Cleveland, Kansas City, New York, and Philadelphia Federal Reserve Banks. There are also resources from the Federal Reserve Board, U.S. Currency Education Program, and the FINRA Foundation. In addition to courses for students, the Federal Reserve District Banks also have resources for teachers, professional development. For many years, the Federal Reserve Bank of New York has published educational comic books in both English and Spanish. These are great resources if you're like I was and need a basic understanding of financial literacy, or if you're just starting off in your career and don't know where to begin regarding managing your money, or maybe you've made some mistakes along the way and want someone to help you turn your finances around by helping you map out a personalized plan to start building for the future while also preparing for retirement. Well, allow me to introduce you to Jeff R. Mitchell, the Principal Financial Advisor of JRM Capital Management. As previously disclosed, he's my older brother and my financial advisor for the last 26 years. I am biased, but if you've been watching my channel for any length of time, then you already know that I have high standards and expectations. He has met them all. He's an excellent financial advisor that will lead you to financial freedom like he's done for me and countless others. What can I say? We share the same gene pool. I'll put his contact information in the description below. Just tell him Jennifer sent you. The benefits of financial literacy are invaluable. Not only will you feel empowered to make better financial decisions because knowledge is necessary, but being financially literate will help you avoid devastating mistakes. Seemingly innocent financial decisions may have long-term implications that cost you money or impact life plans. Financial literacy helps you avoid making mistakes with your personal finances. It helps you prepare for emergencies. Financial literacy topics such as saving or emergency preparedness get you ready for the uncertain. Through losing a job or having a major unexpected expense are always financially impactful. You can cushion the blow by implementing your financial literacy in advance by being ready for emergencies. It helps you reach your goals. By better understanding how to budget and save money, you can create plans that set expectations. Y'all know how I feel about expectations. Hold you accountable to your finances and set a course for achieving seemingly unachievable goals. You may not be able to afford a dream today, but you can always make a plan to better increase your odds of making it happen in the future. And it will help you confidently make decisions. When you're armed with the appropriate knowledge about finances, you can approach major life choices with greater confidence, realizing that you are less likely to be surprised or negatively impacted by unforeseen outcomes. I hope that you have a better understanding of financial literacy and are ready to take the lead in your personal finances. Remember, knowledge is necessary in order to make smarter decisions about your money that will benefit you for years to come. Thanks for watching, and I'll see you in my next video.